If there's one thing that we're all aware of right now, it's that inflation is certainly eating into our spending power. But today we're going to be discussing some strategies that we can adopt to hopefully protect our money from rising prices. We're going to be looking at how investing can help to beat inflation. Now, before we get into this, we need to actually discuss what inflation is. So, inflation is the rise in prices of goods and services over time. This causes the value of your money to decrease. Without investment, inflation erodes the value of your money, meaning that the same amount of money buys you less over time. We've got an example here. If you'd had £1,000 in cash today and inflation was 3%, next year that 1,000 would have the same purchasing power as 970. And imagine over years and years this just goes down. This is where investing comes in, as it helps you to grow your money faster than inflation, so you can retain or increase its value, not lose money over years. Let's talk about why not investing can be risky. Now, for a bit of context on this before we begin, one thing that we hear all the time is that investments are risky. And of course, investments do inherently carry some risk. However, people don't really assess the situation. They don't look at the other side. And the truth is, in today's market, not investing can carry its own risks. If you simply leave your money in a savings account or under the mattress, inflation will eat away at its value. Even if you earn a little bit of interest, it likely won't keep up with inflation. Our example is this. If your savings account earns you a 1% interest rate per year, but inflation is 3%, you're actually still losing money as your purchasing power is shrinking by 2% every year. Over time, not investing could leave you with less money, making it harder to reach your financial goals or even maintain your lifestyle. How does investing though help your money to grow? Well, it's actually quite simple. When you invest, your money has the potential to grow at a rate that outpaces inflation. Investments like stocks, bonds, or real estate can provide returns that increase the value of your money over time. First, let's have a look at stocks. Historically, the stock market has provided long-term returns of around 7 to 10% a year, and this often outpaces inflation. We can talk about bonds, as bonds often offer lower returns than stocks, but they can still provide a decent way to grow your money at a steady rate. Then we have real estate, as property can increase in value over time and provide you rental income that can outpace inflation. Our example is that inflation is at 3%, but your investment return is 8% annually, so you're effectively growing your money by 5% after inflation. And I hope this now makes sense as to why investing can be so powerful. Now we're going to have a look at the power of compound interest. So, compound interest is simply the process of earning interest both in your initial investments and also on the interest that accumulates over time. This can help you to grow your wealth exponentially. If you have a think about this, if you invest £1,000 at an 8% annual return, in the first year you'll earn about £80. In the second year though, you'll earn 8% on £1,080, the original amount plus the interest for the first year. Over time, the compounding effect makes your money grow faster than simple interest, and this is why, when it comes to compound interest, starting early with investments can make a huge difference in the long run. We've got a few types of investments to consider here. Now remember, there are various ways to invest. There's various options available that can help you to beat inflation. Some of the most common types of investments may include stocks, bonds, and real estate. Of course, investing in the stock market in different companies or index funds can offer a decent potential for high returns. But remember, this does come with quite a bit of risk. Now we have bonds. These are often less risky than stocks, providing more steady returns over time. They're often used to balance out a portfolio. We also have things like real estate. Buying property or investing in real estate funds can provide consistent returns through property value appreciation or rental income. Then finally we have commodities, as investing in tangible goods like gold and silver or even oil can help to protect against inflation. And again, then we have the risk of not investing more long term. Over the long term, we could see several financial risks. We could see a loss of growth potential, as without investing, you of course miss out on the chance to grow your wealth through returns and compound interest. We have the erosion of savings. Even if you save a lot of money, inflation will gradually make it lose its value. That makes it harder to meet your goals going forwards. Then we can talk about missed opportunities. Investing can help you take advantage of the market's growth, new trends, and emerging industries. By not investing, you're missing out on the potential for wealth building opportunities. If you save £1,000 a year, but you don't invest it, you could be left with £1,000 real value after inflation erodes it. But if you invest 7% in terms of annual return, your £1,000 could grow much faster. So, then we can talk about the power of starting early. The earlier you start investing, the more time your money has to grow. Even small investments can turn into large sums over time, thanks to compound interest and long-term market growth. Imagine if you started investing with £100 at age 20, with an average return of 8%. By the time you're 60, you could have over £300,000 just from consistent and small investments. The key point here is that starting early gives you more time to weather market volatility and take advantage of long-term growth trends. Let's talk about how to get started with investing. If you're already looking to start investing, if you're ready to begin this journey, here are a few steps to consider and to begin with. Number one is to set financial goals. Understand what it is that you want to achieve with your investments. Think about what you want. Do you want to retire? Do you want to buy a house? Or is there some other mission that you aim to look towards? Think about an investment account. Where do you want to set it up? What are you looking towards? Here are a few options that we've spoken about. A big one is to start small and diversify. Begin with a manageable amount of money and diversify your investments to spread the risk across multiple asset types. And the fourth one is to stay patient. Investing is a long-term strategy, so it is exceptionally important to remain patient and let your investments grow over time. And with that being said, guys, thank you so much for watching this video. Remember, investing is a powerful way to grow your wealth and to protect it from inflation. If you found a video like this one interesting, make sure to give it a like and subscribe, and I hope that I will see you in our next video. Goodbye for now, see you soon.